afternoon, everyone, and welcome to Stock Market Today. It's Alissa Coram here with Ed Carson, and on today's show, we're going to be taking a look at the charts of Gilead as well as Domino's Pizza and Zoom Video, three coronavirus-related plays. But first, let's take a look at those major indexes. This is a chart here of the S&P 500, which closed about flat for the day, as did the NASDAQ. After spending much of the session in positive territory, the Dow was able to finish up about 0.2%, but the market getting hit here in part by news related to Gilead's coronavirus drug remdesivir, even though Gilead now saying after that there was a quote-unquote mischaracterization of the data for this trial. But it goes to show you that headlines related to coronavirus, either which way, are very key to the market right now.
Yeah, and actually, last Friday, once again, we're hitting resistance at the 50-day line. And on last Friday, you can actually show the market closed above its 50-day for the S&P 500, and that was the short-term high for the market. And what was the reason? Well, part of the reason was positive news on this Gilead drug. I mean, it was a little bit more anecdotal, a little bit, and so the market is pricing in expectations for that will reopen the economy. But one way we'll reopen the economy is if there's treatments like this antiviral or antibody drugs that can at least, sort of bridge the gap between now and a vaccine. Obviously this is a resistance area, so there's other reasons why you might sell here, naturally come into it, but it just shows you how much we rely on it. It is sort of surprising. We'll get to Gilead in a moment, but it was interesting to see that kind of action so much on one little drug, having trouble.
Yeah, that's right. But the uptrend is still intact, even though we do have this little bit of resistance here. But let's go ahead and take a look at the chart of Gilead, because we saw some wild action today, finishing lower by 4.3% in heavy volume, again, on this news coming out about its coronavirus drug. And if you can see the past couple of months here, it's just been wild. So for investors who have been looking to speculate on the hopes for this drug, that's quite a risky bet to make at this point.
Yeah, look, it would have been really hard, even if you bought it back, when it sort of first popped up in late January. I mean, there's been times when it's whipped up and down and taken out all the gains. And, if you bought it and then walked away and came back, you go, oh, okay, I'm up a lot. But boy, it would have been really hard to buy it and hold it at any point through this situation. That just happens in that situation. There really hasn't been a buy point on this. It's one of these plays, and just sometimes that happens. Sometimes there's just stocks that actually do go up, but this is crazy, even for a volatile market.
Yeah, and the news today was related to a study out of China, and there are going to be more of these trials and more data coming out, not just for Gilead, but other drugs in the trial process in the weeks and months to come. So it's definitely something to keep an eye out for.
Yeah, and it might be useful early in the disease, they were saying. And so, yeah, we're going to get more data, and we'll see, and we're going to hopefully find out in different protocols. But yeah, it's going to be whipsaw going forward.
Yes, but on the positive side, let's take a look at Zoom Video, one of our other coronavirus plays that we've been tracking very closely. Also, I mean, it's been on our radar before COVID-19, but Zoom's audience has just grown exponentially as we've seen more and more of these stay-at-home orders and online working. Zoom stock hitting a new all-time high today, up 13% in above average turnover here, Ed. What do you make of the move?
Yeah, I mean, they said that on yesterday or so, it was like 300 million people used the platform versus 200 million in March. And I think it might have been like 10 million back in December. I mean, just enormous growth. Not all of it's paying, but this is going to be something that, presumably the work at home is going to be somewhat there for quite a while. So even if half the people in the office, maybe everyone's still on Zoom. I mean, it may not even cut that down so much. I'm in the office, you're not, and we're on Zoom right now.
Yep.
because it didn't used to be. So tremendous growth here. The consolidation is too short to be a traditional buy point. I mean, look, if you bought it today, you'd be up. I mean, but there's a lot of volatility with this one and just a lot of risk. So you just try to,
Hmm.
it's like a 3 or 4 week consolidation and really up and down. Again, it's a tough situation. Sometimes not every stock provides really good opportunities, and this one had some
Hmm.
back at 90 or at 100, but that's a
Right.
long time ago. That may have been
Hmm.
the last really safe spot where you felt I
Yeah.
can hold it through the whole time. And that's great if you did, but otherwise it's been up and down and probably wiping out gains along the way.
Yeah, it's exactly right because right in here, an extremely sharp pullback. Aggressive traders could have bought on the rebound off of the 50-day, but
Hmm.
again, that's an aggressive move. But we were talking about these sorts of things all the while on IBD Live, so it's a great place to get trade ideas, not only through the lens of those traditional IBD buy points, but those aggressive and alternate entries as well.
That's right.
All right, and last but not least, let's take a look at Domino's Pizza. It did have a beat for earnings and sales in the quarterly report, and it fell, though, about 3.6%. Was able to find a little bit of support, it looks like, at that 10-day line. Strong earnings, but sales in the low single digits. Do you think that's what investors were taking issue with here?
I don't know, because they also said that April sales, which is after that quarter, like April sales have been stronger. So you could actually, there is a little bit of momentum. You'd like to see even stronger than what they were saying for April, but it might be just be pricing and everybody's expecting good results. This is why you want to buy in a buy zone. This stock was extended and you don't want to be caught out, because at the lows, if you bought near the high yesterday, you'd be down 6, 7, 8%. And you might be like, and yes, it came back somewhat and maybe this will work out. But what if that's the beginning of a big long slide? If you bought in the, when it was breaking out, you're still up and you had a bit of a cushion. That's something when we come into earnings season, even stocks that look strong, even stocks that have good results, sometimes their stocks won't react that well, at least initially. And so you want to buy right so you can handle situations like this without getting burned.
Exactly. That's very true. And also good to note that Domino's is one of our long-term leaders. So we've been analyzing this one very closely, especially since the coronavirus pandemic started. So we'll have to see where it goes from here. If it can continue to hold up. It was, down 3.6% on earnings, not exactly what you want to see. But if you take a step back and look at the chart, the damage not too significant here.
No, no, not if you bought it right. That's right.
Exactly. All right, everyone, that is it for today. Thank you so much for joining us. And of course, the conversation will continue tomorrow morning on IBD Live. That's your place to get real-time analysis of top stocks setting up and insights about current market conditions. So we definitely hope you join us to cap off the week.
All right. See you tomorrow.
All right.